Good morning, everyone, and thank you for joining us on Morning Markets from the team at True Potential. Today, we'll reflect on asset market performance yesterday and also look at some of the economic data that we've had overnight from Asia. So just looking back at asset markets yesterday, very much a continuation of the trend that we discussed yesterday morning, and equity markets gradually moving a little bit higher over the course of the day, and within sovereign bond markets, particularly the Treasury bond market, a move in yields from that step out that we saw over the past number of days. So just reflecting on equity markets themselves, what did we see there? Saw the Asia Pacific MSCI up about 0.3% on the course of the day. Looking back over to then Europe, we had the FTSE 100 down marginally, about 10 basis points in the day. The other side of that, the Euro Stoxx 50 was up about 10 basis points. Turning then to the US markets, what did we see there? The S&P is up again about 0.2% and the Nasdaq up about 0.4% on the day. So very much the trends that we've been seeing over the past couple of days remain in force in equity markets in terms of the sectoral performance as well. Just turning then to the Treasury market, and has definitely been the main focus of asset markets and investors over the past week, and that continued to really be the case yesterday. We've been discussing how rates have moved out, but then they started to move in a little bit on Tuesday, and that was sustained yesterday with rates coming in a little bit further over the course of the day. That's been driven by a number of factors that are in the background there. I think one is that we had another very successful Treasury auction at the 30-year duration this time, so we had a good auction yesterday at 10-year duration, and that initially started to bring yields in a little bit further. But then more importantly, and one of the points that we have been emphasising is really the importance of communication at this point in time, and how the market will seize on any communication from the Treasury and from the Fed, particularly as it relates to around the funding of the stimulus programs or the support programs, but also as it relates to the Fed's bond buying program and the quantitative easing that's in place, specifically how they may taper that back or reduce it. And over the past couple of days, there's been a number of Fed governors speaking, and they've been really keen to emphasise that there are no plans at this point in time to taper bond purchases at all. And I think that's given some reassurance to those in the marketplace that maybe thought there was something to come there. So that supported the movement back in yields over the course of the day yesterday, where we got back to 108 on the US 10-year from around 113, 114 on Tuesday. I think it's an interesting point just to reflect that we've kind of seen that two sides of the Fed demonstrated over the course of the year to date already, a very short time period, but we've seen that subtle change in communication coming through. Ultimately, however, the direction of sovereign yields, and particularly the US, is going to really be a function of a number of factors. Those factors being the scale of the stimulus package that we're going to see from the Democratic Party. We'll get some more detail on that over the coming weeks. That will be crucial. Be also then the rate of economic growth and economic improvement that we see over the coming months, and how that feeds into the inflation backdrop. So those are the sort of the three areas that the market will focus on. It will drive sentiment, but it will also drive the real direction, the real inflation rate, and the real direction of yields over the coming weeks. So that's something that is very much and will remain very much front and centre of the market's attention. With that sort of backdrop of buying of Treasury assets, wasn't surprising really to see the dollar strengthening a little bit over the course of the day. Just for reference, whereas sterling trading at the moment, it's trading at 136 to the dollar. So again, staying towards that upper end of where we've been since the post-Brexit agreement. Just the one area to look back on in markets yesterday was just an economic data point. We've touched on the importance of inflation and looking at inflation trends. Just where was inflation in for December in the US? It increased 0.4% month on month. A large part of that impact is fuel and food related. So if we look at core inflation, excluding those two variables, the situation much more muted really, with inflation increasing 0.1% month on month. Just to give you some sense of what that looks like on an annualised basis, it's 1.6%. Keep in the back of our mind that the Fed has got a target on PCE inflation, so not just consumer inflation, of 2%. So still some way to go there, whereas inflation expectations are suggesting we're getting closer to that. So we'll need to watch that and watch that go through. Our manager calls are ongoing at the minute. One of the points there that's been made is really the transitory effects of inflation increases, given the very low base effects last year, that we'll need to watch out for through the first half of this year. Some managers suggesting we could see an inflation print of 3% in the early spring. I think just the other thing to touch on this morning is just what the data points from China and Japan. Chinese trade data this morning, exports and imports, both very, very strong in terms of the trend. So exports up 18.1% year on year, imports up 6.5%. Both numbers coming in better than expectations, and just really giving us an indication of that ongoing economic recovery that is evident both domestically and internationally. I think the other thing just to touch on as well is just in Japan, where we saw strong machinery orders coming through there ahead of expectations, again supporting that ongoing improvement that we've seen in Japanese data, and that's again something that was better than expectations. So again, a number of trends that are positive, and speaks to just the really mixed picture that we're getting from data prints at this point in time. I'll leave it there for today. Please do subscribe on YouTube and join us again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.